Let's get the very latest from the eNCA Money Desk. Rofiwe Madzena is standing by. And Rofiwe, I see that an investment firm have been heavily fined after being reckless with people's money, something that there's more pressure from regulators to be hard on.
That's right, Marcel. So the Financial Sector Conduct Authority has slapped investment management company METCI Collective Investments with R100 million fine. Now, it's one of the biggest fines handed down by the FSCA. So METCI was found to have exposed its investments beyond legal limits, and the fund marketed itself as a money market fund but almost wholly invested in derivatives. An investigation showed METCI's poor governance had led to one of its unit trust funds losing approximately 66% of its value in just 3 days in December 2015. Now, the company was found to have issued misleading statements in the disclosure documents about the nature of the fund. And joining me now to discuss this further is Jurgen Boyd, the Divisional Executive for Market Integrity at the FSCA. Many thanks for your time. Now, let's talk through some of the findings that you have indicated here. You do say that there were risk processes that were not followed. What else?
So it was risk processes together with the fact that they were not complying with our regulations, the regulatory requirements with regard to derivatives, which was the main underlying investment they had in this particular fund. So they wholly ignored those regulatory requirements, which resulted in the massive losses.
Now, who lost money and how much are we talking about here?
So the investors in this particular fund lost somewhere in the region of 145 to 170 million rand, depending on which day you measure the loss. And they lost this amount of money principally because this fund was invested probably 90–95% in derivatives, which is very, very highly speculative. And over the period around about the firing of the ex-minister Nene, when the markets tanked, because of the high exposure of derivatives of this fund, they incurred these significant losses.
I'm thinking about the trends, and I'm sure this is not uncommon for asset managers or investment firms to look at riskier assets and ways to make money. But are you seeing a trend of this increasing? And I mean, is this going to be the new benchmark, this 100 million rand figure in terms of punishing these firms? Is this going to be the next benchmark?
Well, I can't say this is going to be the next benchmark. If and when we have serious contraventions like this, then we will definitely consider the circumstances, and that will, and the level of deterrence that we want. That will affect or impact the level of administrative fine that we levy. But you know, insofar as the CIS industry goes, this is a 2.7 trillion rand industry. This particular instance of losses due to really not following and complying with our regulatory environment is absolutely unusual. We've never seen losses as a result of a contravention of this state before, and hopefully we never do see it again.
And it was in a very short period of time. I think it was 3 days that you mentioned that these losses occurred.
Yes, yeah. But the fund had been in fact investing in this type of instruments long before these 3 days where they had to actually they had to close out. There was a futures closeout on the 11th of December 2015, which is 2 days after Minister Nene was fired. And when you close out, you have to sell out your derivatives, and that's when the losses hardened. And that's why these came to the fore. And obviously during that time, the markets took a bit of a tank because of what had happened with regard to Minister Nene.
Jurgen, who pays for this? Is this another burden that's added onto people that are invested with the firm, or is the firm has to come up with the finances, but how?
the firm has to come up with the finances. It'll have to pay for it out of its, if it's got reserves, out of its cash reserves. But it's the firm's responsibility, certainly not an investor's responsibility at all.
Right. And then also, is there a payment plan that's given to them in terms of paying over a period of time, or is this a lump sum payment?
This is going to, we're asking for a lump sum. There's no payment plan in this instance.
Yeah. And then just a final question. I mean, you mentioned it a little bit earlier in terms of the trends. What are we seeing in terms of the investment methods that are being taken up by companies like these?
Look, the universal rule of investments is higher risk, higher return. But the regulatory environment that we created as a regulator around CISs lends itself to more less riskier investment. We have prescribed investment limits and prescribed assets you can go through in terms of our regulations. So it's not a free-for-all to chase return in very highly risky assets. So we kind of have adopted a paternalistic approach to the CIS industry in the way we set up regulations, and it's done itself good over the years that we've hardly ever had scandals of this nature before.
Brilliant. Many thanks for your time. I've been speaking there to Jurgen Boyd, the Divisional Executive for Market Integrity at the FSCA. With that, let's take a look at how the markets are performing this afternoon. So from a bit of a blare of a day yesterday, today we're seeing red across the board on the JSE. So it was lower this morning, tracking global markets as investors ponder the state of the global economy. And this follows that weak manufacturing data that came out of the US and the Eurozone a little earlier. And then taking a look at the local unit, the rand is still being knocked about by the number of factors that we're seeing. So we saw yesterday's poor local manufacturing data, geopolitics also putting pressure on emerging market currencies. So we could see that it has pared back some of those losses that we've seen earlier in the week, but we are seeing the 6th consecutive day of losses for the rand.